Oh yeah, good call, good call. Forgot to change that. I can do that right now. Dummy. Good morning. Okay, there we go. I'm in the future, that's all. We're just cheating. That's funny, okay. Good look, so good reminder. Mess that up. Okay. Well, a few minutes till we open. We got buy side up here. I'm kind of looking at that, but I'll be right back as we head into the open. Oh wait, I'm on an NQ. Yes, there we are. What up, Max? We only had 2 this week, honestly. Pretty slow week. Bank holiday, FOMC, so haven't missed too much. We are running. To be honest, I don't know. I want that buy side, but if we get there before the opening, we might just consolidate and we'll be out of luck. Because right, the whole idea was we're just going to stay consolidation. So let's go to higher time frame. As we've wicked these 4-hour lows, let's hide everything. We wicked these 4-hour lows here. The expectation would be if we're going to maintain this range to clear some internal structure highs here and here. Maybe we can get ambitious and reach for this. I just wanted to target that internal range. So maybe, let's see, do we have a small 4-hour? We do have the 1 hour. So I could see that potentially. And then from there, we'll have to adjust and see if we want that buy side. But for the time being, I like higher prices. How do you scale funded accounts? What's the best strat and firm? I mean, it really depends on what, like if this is your first time trying to get funded, I always like a top step or like a my funded. I'm using the my funded futures now. They're pretty legit for kind of new traders just getting into it because they have pretty easy targets and the payout structure on those I would say is the best, right? Just needing like 5 days of 200, which is pretty easy if you're just trying to get payouts. If you've already had payouts or you have accounts and you're trying to scale, I mean, Apex is hard to beat, right? Just because the ability to have so many accounts with them. They run into trouble with kind of their payout policies, though, a lot of denied payouts. But if you're trying to go, let's see, you said thinking about 250K. If you're just going with 2 like 50Ks, 2, 3, 4, 5, honestly, I think Top Step would probably be your best choice. Top Step in my funded futures. For me, if I'm going to do that, like when I'm trying to add to accounts, what I usually do, and a little bit less, I guess, not the best advice, we'll say that, just because I already know what I'm doing, right? So I'm not too worried about passing the evals, is that I'll buy actually more than one. So whatever I'm trying to get, say I'm trying to get two accounts, I'll buy 4 and literally just go half and half with them. Full port, half long, full port, half short. Pass the eval. And at that point, because we do know what we're doing, treat the fundeds just like actual trading. Live trailing drawdown. Yeah, Apex has that as well. Right, so like I said, Apex allows the freedom to, or the opportunity to get a lot of accounts, but their rules are a lot harder. Trail down's a lot more strict. Payout policies are a little bit more unclear. It's a lot wishy-washy. So we have opened up. We are short of that buy side. So let's see, we've cleared this low. Maybe we run into an opening gap midpoint. Already though, as we clear this liquidity, if we were to invert the bearish fair value gap here at 929, I would expect that to be used to run up into our buy side. I'm targeting this as kind of our swing point high because it's nestled within the first presented fair value gap. And now we do have a new week opening gap, so kind of seeing if that's going to hold. As we often say, midpoint of the opening range will tend to get retraced into quite a bit. So we'll see if we want to run lower first before rejecting to go higher. NQ has already cleared its previous day high. So this is the buy side that we were aiming at relative to ES. That's that daily swing point. We hit it before 9:30, which often will lead to consolidation in the morning. Since we did do that, we actually might see this little bearish fair value gap hold us into opening range gap midpoint. And then from there, maybe the bounce. Be a large range overnight, gap opening. As you said, I like the idea of trying to get into that midpoint at least if we're going to run higher. Because NQ has already cleared its high, we're going to have to gauge if that's going to be SMT or if we can get another run here. What I would kind of look for is for us to run these lows. Let's say that we want to get this high. We'd want to see this pretty much run these lows out. We'd want the opening range at midpoint to hold us, and then some type of bullish PD rate of form to take higher. That could either be some type of inversion as we trade into it. That could be a bullish fair value gap, volume imbalance. Doesn't really matter. But yeah, as you said, we'll be demanding of the entries. Midpoint first should be good. Not really pushing for too much, as we said. Bank holiday, FOMC holiday, Friday to close out the week. Don't need to be too greedy. Just following price. Still like the inversion play for the original buy side. As we said, NQ had cleared that buy side already heading into the morning, which is why we're seeing this slow opening. We get that at 9:28 pretty much. 9:30 runs lower, pick up a short-term low. If we can get above the buy side and continue to run, that'll set up a good long opportunity here in ES to catch that high as well. For the time being, just stuck inside the BPR, the bullish fair value gap. We invert that with the bearish. It's going to be a key area here. Getting stuck at an old weekly first presented. Okay, so that's here. That's what the candle bodies are holding. I'm kind of watching that. We trade it inside it heading into the open. We try to wick into the midpoint. We can't. Body holds. Next candle hits the low of that perfectly, and now we're starting to accelerate. So if we were able to, as we say, invert this bearish fair value gap, we'll also be getting back above the first presented. To me, that should hold as a area of support, a discount, to at least get previous day's high. Just hit midpoint, so we'll watch the reaction now. Midpoint will offer us kind of the high sensitivity. So 5 minutes is showing one thing with bodies respecting the discount. 1 minute, however, is now respecting the premium. So as we said, just in kind of that choppy opening. What we would often expect to see is if we're going to trade into the high or the midpoint of a fair value gap and close below, that we'll try to use that as now resistance to send price lower. So especially if the bodies are going to respect this. We've hit the midpoint once. I want to see if it gives another attempt. If we were to make another attempt at that midpoint and get the same rejection, at that point I would expect price to kind of fall over and make an attempt at the opening range gap midpoint here. NQ is able to get above its buy side, so it's above its previous day high now. It's actually left a fair value gap there. We'll see if this wants to six sister and catch up. All right, as we said, if we can invert that, should allow us a not buying opportunity for buy side, and then the 1 hour inefficiency here. I would have liked midpoint, to be honest. See how we create kind of this failure swing so low, high or low. Just above that, to me, kind of leads me to believe it's going to want to be targeted at some point to clear out these short-term lows as we return into the opening range gap. We'd have to displace through this. So displacement with a discount in place of this premium fair value gap here would be kind of what we would need to see to leave these lows behind. Bullish volume balance. We'll see if that remains open. Let's say that remains open. We close above midpoint of this bearish fair value gap. We would expect that to now reach through the high and eventually outside of it. And we do have that volume balance. So as we trade up into that, I kind of just want to see, are the bodies able and willing to close above that level? Or is it going to give us a sharp rejection? Perfect delivery into the high now. As we said, if we're going to close above midpoint, we would expect that price wants to continue to venture outside. So now we'd watch to see, can we close above the volume balance and potentially actually leave a little fair value gap here is what we were talking about. Leaving a discount in place of the premium. Of course, if this candle holds the volume balance, wicks back down, there's going to be no fair value gap. So it'd be purely just an inversion play. But already not necessarily what we want to see at the volume balance, right? Best case for us would be actually to hold this candle's low. So don't create a wick on this. Close above the volume balance, which would leave now that 1 minute pretty much aligned with the high. And then we would try to see if that wouldn't want to hold the inversion with the 1 minute to get us up into that buy side as we mentioned there. So at this point, just waiting for the closure. Looks like we might be able to close above. Okay, so we do get the close above. As we mentioned, that's a first presented as well. So now if we did get into that, we would see, right, if that can offer us support to get up in the buy side potentially. It may just run now that we closed above the volume imbalance and open with another one. So if we get the volume imbalance entry, now that this candlestick has pretty much hit this candlestick's close perfectly, that's the pretty common volume imbalance we would expect to see. And then this candlestick would actually push higher, leave that open, clear buy side potentially and run. This week's first presented here as well. That's what this area is. So it's going to be pretty strong magnet, which is why I like trying to get up into that. Previous day highs is aligned with that. Okay, NQ strong right now. As I said, as it gets above its daily high, we would expect that to be where it would like to hold from. We close above it. We then use it as support beautifully, and now we're running. So ES might just run for that actually. No retracement entry. NQ, what could NQ be going for? I like that. So we'll see that as well. Yeah, it's a potential. Okay. So back to ES. Kind of watching these little volume imbalances that are being created. We like to kind of pair them with time-based, as we said. So for me, even though we have a volume imbalance here and now that inversion, we would allow a retracement into the actual 1 minute, and then we would look for the bodies to hold that. If we're actually going to want to maintain pretty strong delivery, however, most recent volume imbalance will support bodies. So I'm watching this one, but simply allowing for the deeper retracement won't be thrown out if we can get back into that. Understanding, however, that if we are going to maintain just that strong bullish delivery, most recent discount here, volume imbalance with the 1 minute fair value gap, will try to hold us. So there's retracement. Now we're going to see if we give a deeper retracement. As we said, we just ran these highs, so that's not a true break in structure as we talk about. If we're going to want real confirmation, we prefer that candlesticks close above swing points. If they wick those swing points and stay in their range, that can be pretty much like indicative of retracements, run on stops. So at this point, we'll see if we can hold that area, get through. Let's say that we fall back down below the 1 minute, then we would try to target opening range of midpoint. We already have the expectation we may be choppy, so we're looking for one more bullish run just in the previous day's high opening range, or the first presented here. Pretty nice from there actually, right? As we said, we can expect the wick into the actual fair value gap. We would want the bodies to hold, or the volume balance to hold the actual bodies. So now we'll see if we can start kind of expanding away from that. Oh my goodness. Okay, well, I like this here. Kind of screwed up my entry already. That's unfortunate. We should run into this. I didn't adjust my TP. So I'm already out. I went long here with the original TP at the high. But as we close that volume balance, I'm trying to move it into the actual first presented daily highs where the objective would be. But at this point, I don't think I'm going to re-enter. So we'll just take the 5 that we just got. Goofy. That's all right. Friday. Happens. I forget the multitasking could be tough. Yeah, that one just happened quick, to be honest. Every other one has been shown this week. As I said, sometimes I focus more on the actual funded entries over the paper for you guys. That's where it runs into an issue. I guess that works though. Back inside the inversion. Yeah, I guess that's what it said, huh? It said, nah, be content with enough. Yeah, right. Just there. So I'm using midpoint of that 1 minute, as we said. That's paired with the first presented. That's going to be a time-based PD array. We close above the actual balanced price range. First TP was going to be that. And then I like the actual high here, but we may get lucky at that high. So we get in on midpoint and we get out as we pretty much just tap that equal high. 5 handles. Very quick scalp. I don't mind that though. I like being in short trades. I still think we could hold this though, so let's see. Because we do have relative equal highs there now. So if we're going to expect bullish momentum to continue, what we would look for, if I'm being honest, I would rather see this low be cleared first. So I'd want to see price run out this low, get back below this fair value gap, run out these lows, and then look for the reversal. Because now we'll have some liquidity that we've picked up while returning into that time-based PD array, right? Our opening range gaps and midpoint. And then from there, maybe some type of bullish setup back into these equal highs. So for that to take place, I kind of would want to see now discounts pretty much being broken down. So we left the volume balance, same idea. We'd want to see the volume balance hold the body. The wick can go into the actual fair value gap that's right here. And we do understand that there are equal highs, but if we're going to want to save those for later, this is where we wouldn't want to see those equal highs be engaged with yet. Instead, use the most recent premium, hold that premium, get outside the original bearish, reclaim that, then use that as resistance. Get into the low here and here, and then opening range midpoint, as we mentioned. Nice. Yeah, it's money right there. Hollow, quick and easy, right? Keeping it simple. As we said, Friday, no high impact news. Closing out the week of FOMC. We got to be very concise. I mean, to be honest, for the foreseeable future, I'll probably move back towards the ends model, which is simply 5 handle runs. Just because we are very uncertain. Any news at any moment could create a crazy black swan where we drop 100 points, 100 handles. So we'll have the framework, we'll have the targets. But as far as the runs themselves, I won't be very demanding until we show that we are in a very trending market again. So that's what we would expect. So now if we're going to close below that, we would want to watch and see, does the original bearish fair value gap hold? Right, we would reclaim that. If we're going to trade up into that, we want to see that hold to get us into opening range midpoint. And that's almost where you could have an opportunity again as well. Stop would have to be above equal highs, which could be fishy. But as we said, if the expectation is that equal highs are going to be left for the run higher after clearing out sell side, those will be protected for the time being in this price like high to low. So that premium here should hold. Oops. So as we said, volume balance holds nicely. I'm also saying that because that volume balance is midpoint pretty much of the 1 minute, so we would expect that to hold. This is now being reclaimed, 1 minute fair value gap. Right, you see that. And now, yeah, we should just run here. If we do, then we'll look for the potential reversal again, because I still like the idea of trying to get those equal highs now. Previous day high, yeah. He said made more than, oh, oof. That's always unfortunate. Who are you using for that? I guess it's like a 40% consistency rule or something. Turtle soup? Nah. Need much more confirmation. But that may be a possibility. Quick tap of that. To clear it up a little bit. All right. So yeah, we'll look for opening range gaps midpoint here. Once again, notice how as we run out a low, it's all wick. So this is very indicative of just consolidations, right? Slow price delivery, same idea up here. When we run that high, we get no candle closures. As we're running this low, it's simply a wick. I still favor that, so I think this will simply be kind of hesitation with another fall through. Which if we did, that'd be actually fine, because if we could do that, clear out this low. Like so first leave this swing low in place, print this candlestick inside the range, run out that swing low as we hit opening range gaps midpoint, and then some type of inversion play. That would give us the best opportunity to try to now long back up into the relative equal highs that we've created up here. So yeah, I think we hit that for sure, but we should get midpoint. And closure below would now send us into midpoint. We'll probably want to use that low as short-term resistance. So as this candlestick hits that, we'll want to see, right, are we going to wick that? My guess is we hold the bodies underneath, use that as an area to wick, and then run right into this. Then from there, as we said, we can reassess. Ideally, so we might have a 2-minute. I was like, ideally, I like having inversions as we do this. If we have some type of volume balance, we might have to use that, but we'll see exactly what forms. At this point, relying on the candlestick structure. Equal lows there. Yeah, so just typical consolidation conditions here. Create equal highs just short of a daily swing point. Creating equal lows just above a key area here. As you said, still wouldn't actually mind this, because let's say that we can like hold this volume imbalance or fair value gap, excuse me, clear out these equal lows, creating a swing point and then breaking through that swing point. That'll actually give us an area to enter. I'm very tempted to almost try to soup this right here with the expectation that where would we be able to go stop? Like, I don't think we would get under this first presented if we truly were going to hold that midpoint just to target the midpoint high, which is the fair value gap itself. See if we can get confirmation of that. So I'm fine not souping it. But we're going to frame that idea, because then if we do reject, we'll be able to run higher. So there's tap of midpoint. See if we can hold that. If we were to close below midpoint now, I would expect venturing lower into the first presented here. If this is kind of all we want to do, we should see the wick pretty much as we saw here. Okay, yep, so pretty much a wick. We really would expect that to become a swing low. So if that can be a swing low, we accelerate above the original high like we spoke about here. That becomes the turtle soup. What up, numbers? Yeah, that's the turtle soup, so that would have been clean right there. 5 handles, you're out already. But I like the idea of potential OB here if we displace above fair value gap. All determining this fair value gap. This is kind of like line in the sand for me at this point, right? We use it once to send us lower. We could use it again. If anything, we're going to use the original liquidity low now. Close below liquidity, retracement into the last premium before we clear that short-term liquidity, followed by another close below that, right? If we're going to maintain bearishness, that original level right here, this short-term low, we'll try to hold price below it. So I do like that we can kind of get above that. I want to see this be inverted if we're going to give another run into the highs here. If not, maybe just a slow grind lower, which at that point we won't really have anything to be involved with. I'm trying to find, where's midnight here? Midnight's all the way back, so we've already gotten below midnight. Daily candlestick rather bullish. Yeah, because daily candlestick wicks that low, so actually I would prefer daily high, to be honest. Like, right, consolidation, we would want to see an outside range day. So if we're going to pick up a daily swing point, previous day's high would be in the crosshair, especially because we have relative equal highs there now. So that really is, yeah, that'd be my objective. I'd like to see that. So we'll hold out for something higher. As you said, if we just keep following lower, lower, I'm fine. We'll miss it. Yeah, NQ already took previous day high. That's fine. We'd want to see this be a six sister and catch up. So that swing point does come in at the low. The opening range got midpoint. That's nice. Yeah, it doesn't ever need to do anything. Simply bias. Like I said, if it goes lower, that's fine. We just won't be involved. Already got our money for the day. Albeit pretty lucky. I guess luck over time, right? Experience creates luck, we'll say. So usually for the ends model, you'll find that most of the time there will be some type of target that will actually align with the 5 handles, and then I'll use that. If I'm trying to get 5 handles and there's no actual PD array that I could aim for, I'm just going to aim for whatever would produce 5 handles. So let's say like it's a 9 handle move, I'll aim for that, scale off at 5, and then hold for the actual final objective. But you will find usually there will be some type of PD array, right? Whether it be a fair value gap, a candlestick high, a volume imbalance. There tends to be something at that 5 handle mark that we could use to grab. Love that, yeah, right? Experience creates the luck. It rewards those who practice. So slow grind, slow grind. I do really want to buy that, to be honest. Right, because I'm looking at this wick here. When we run this high, that is really balanced at this point. Because we come up, we create this high, we retrace into the discount, consolidation. We create a huge wick and then we push through that wick. We often say that wicks like that we see as gaps that should hold price. Right, because if we're going to wick and then push through that wick, we should respect that. Pair that with the first presented. Just below. Okay, so that's what the first wick goes into actually. So I wouldn't mind that, right? Wicking into the actual old wick. But you'd want to see the bodies maintain the opening range gaps midpoint. At this point, we are getting just a little bit choppy. This is where you kind of commit to the idea, right? So if we are going to see higher prices, this midpoint paired with the wick should hold us. And we'll just commit to that. If we fall through, then to me, that's when I would become a little bit more bearish. You know, I actually probably look for like these relative equal lows in here. Especially if we got below the first presented fair value gap that's right here. So we can give an aggressive wick down into that. I want to see what kind of rejection we're going to get from there. Yeah, there was a volume imbalance down there, but that may be left for another run lower. Like, especially on a Friday, I'm being completely honest, I would not see. He said, I think we dumped, I was about to say, I don't see us dumping like that crazy. Unless, of course, you know, war. A Trump tweet. Like I said, at any point in time, we could be completely wiped out. So because I have that base assumption, that's why I'm being very quick with my exits, right? 5 handles here, 5 handles there. If we can hold another one to run, that's fine. But I have the base assumption that at any moment, the market is going to collapse or rocket either direction. It doesn't matter where it goes, but right, black swan event. So because of that, I'm very, yeah, just cautious. Demanding a lot more of the entries. Cool, okay, so that's what we would want to see pretty much. Midpoint, first presented, perfect delivery. We've gotten back above opening range gap midpoint. So from here, we would want to see that pretty much offer support and accelerate, get back above this original short-term liquidity. Let's see if we can do that. No inefficiencies here on a 2, on a 5, or anything like that, which is why we're pretty much just relying solely on the candlestick delivery. NQ just slowly falling lower, right? Slow grind here now in NQ. Lower, lower, lower. Trying to see, we didn't get that low. Okay, so no SMT or anything yet at the lows. Very true, Mike. Especially when we don't have any high impact news or anything to kind of drive price in either direction. And especially because NQ hitting previous day high before the open like that, people often ask what are signs that we're going to consolidate in the morning. That right there is a kind of a clear-cut sign. Like if we're delivering into daily objectives before the opening bell, I'm almost always going to expect consolidation to follow that morning. So then you just pair that with the fact that we are in a Friday with no news. Just add those kind of ideas, right? Why choppy price action would be expected. Had a great time, great holiday. But hey, we'll still see if we can get some. As we said, for me, the only trade this morning, and it might be the only one because we got a nice little entry and exit on it. Just here. Midpoint of the first, or of this fair value gap, right, the balance price range, getting out at the equal highs, got lucky with the exit before retracing on us. And now we're just sitting inside. If we can do something outside of this, I still want longs, right? So I probably won't chase anything short. We'll just follow that delivery if we're going to do that. If we can like run a low displacement, some type of fair value gap, I wouldn't mind trying one more. Even just like into here, 1 to 2. But we'll see what presents. We'll see what is presented. No need to gamble. Our 5-minute has closed below the opening range gap midpoint. So higher time frames, 15 as well. We'd want those higher time frames to start getting back above. So we're inside of a 15-minute fair value gap, right? I could show you that. Like this. So we're inside of a 15-minute, that's what we're hitting here. As we look at the higher time frames, right? 15-minute has closed below, 5-minute has closed below, 1 minute has closed, or 1 hour has closed below. So we'd want these higher time frames to now start making an attempt to get back above. We're gonna have to first wait for like 1 and 2 minute candlesticks because we're gonna have to work in reverse now that all the candlesticks have closed on the higher time frame. So first we'd want to see 1 minute candlesticks make an attempt to close above, start using it as support. We didn't want the 2 to follow suit, 2 minutes stuck. We didn't want to see the 5 minute get back above as well. And then ultimately, ideally, right, see the 15 minute, try to get back above and actually not leave a fair value gap here. Notice how there hasn't been one inefficiency created since we've pretty much created this low. We create this swing point, and then right, every single candlestick is pretty much completely painted within itself. All wicks, right, all efficient, wick, 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 wick. Now we've fallen through. Still not convinced, but we need to close below that. This could simply be a large wick to clear out short-term lows, holding the first presented. And then from here, if we get the rejection higher, that's pretty much what I'd want to see. As you said, if we fall through this fair value gap here, we'll just continue to follow the bearish move. But I'm fine not executing within that. SPX, what is that? That's like the CFDs, no? I don't really look at that too much, if I'm being honest. Or at all. I can't say I think I've ever looked at that. Oh, if you're trading options, okay, I see what you mean. I thought you were trying to day trade that, like with a Forex account or something. CFD straight scam. They could be, because it's really just based off the broker, right? That's why it's tough. Futures are nice because it's a centralized exchange. So everyone's seeing the same price. Everyone's interacting with the same price. With CFDs, you get a little wishy-washy, right? You can offer different prices. Which is why I kind of moved towards futures. When I first started, I was a Forex guy, because that's what Michael taught as well. GU was my baby. But then I got introduced to futures and realized, dang, I like futures, man. They move pretty clean. The only bad thing is the prop firms in futures are a little bit more restrictive. Like Forex prop firms, pretty easy to be honest to pass. 10% drawdown, things like that. Okay. So this is the first attempt of a candle to get outside of that wick that we're speaking of. It'll also be the 15. I'm just going to keep the 15 up itself because I like that. All right, so this 15 minute, this is the first attempt to pretty much get below that. Now we're going to need the 15 to close to truly say this will be an inversion. But this is where we can start to use the lower time frames to try to give us that idea before it actually takes place. Like especially like if we left this 2 minute, let's say we leave a 2 minute bearish fair value gap here aligned now, while still maintaining and closing below, I would expect us to run lower. It all depends on the close though, because wicks can do the damage. Now 1 minute has closed below, but we need 2. So this previous candle can completely be negated if this candle was to get back above, in my opinion. If this candle got stuck here inside of this first presented and the 15 minutes consequent encroachment rejected and closed below the 15 minute fair value gap again, I would trust that a lot more to produce a run lower into some of these now equal lows. At least this, right? This is an untapped inefficiency. Those are always going to try to be traded into. So no price delivery within this. Failed to get into it here. But at this point, simply waiting on this next 1 minute. Because if we do negate that, right, the 2 minute will still hold. And as we said, we really need a 15 minute. That's what we're going to rely on. So when you're using fair value gaps and trying to turn them into inversions, you need to wait for the corresponding time frame to confirm that. And because of that, we could get a few things, right? We could maintain the bullishness and show that we're going to be bullish, so this will wick and close above the fair value gap. If the intention is to close inside the fair value gap, we'll see consolidation these next few minutes as the 15-minute candlestick closes, excuse me. If the intent is to create that inversion, then we will see, as we mentioned, if the 1 minute holds that first presented, it will now make another attempt at this low and try to close below this. So a few different scenarios that we're watching here. Okay, so the first 15-minute holds that, or excuse me, making another attempt through the low. 3 minutes until this candlestick closes, so pretty much at 10:15. That's why I'm not fully committing to like this here, because this could be another wick, but if we start closing below and can maintain that, then that'll set up a nice run lower potentially, especially once the 15-minute closes. So we close below it again. At this point, based purely off price delivery, you would want to see the low or the midpoint of this 15-minute kind of be the sensitive area. But you'll notice how, as we've continued to say all morning, when we're running out lows like this, it's simply a wick, right? So we're not really running out lows aggressively. It's happened every single time. I mean, we could just follow it back. First low, wick. New swing low, wicked. New equal lows, wicked. Swing low again, wicked. So just high resistance liquidity runs here as we continue to move lower. We have created a small fair value gap finally, so notice that, as we said, we had no inefficiencies in here. Look where the first one gets created. It's paired with the 15. So when I see something like that, too precise to be random, midpoint is the actual 15-minute gap's high. So like this would kind of be my flip point, right? I'd want to see, can we close above this? If we can close above this, to me, that'll set into motion a run higher, especially as we clear these lows and maintain the actual bodies still inside the range. So we said 15-minute, if it wants to close inside the fair value gap, is going to consolidate until 10:15, and then we'll get a true move. That looks like what's going to happen here. We got about 2 minutes. If we're going to favor longs, we would want to see price ideally close above this first presented here. Best case scenario, actually close above the 15-minute as well. So let's see if that plays out. Okay, I like that. So we can start kind of following short-term structure. Like, let's say that we want to maintain bullishness. When we close above the first presented, we want to see that hold its bodies. So we are in the overarching 15-minute, which is why kind of giving this as a not the greatest respect quite yet. I want to see how the 15-minute closes first. So in 20 seconds to 15, we'll close, and we'll have a little bit more information to use. It's gonna close right on its midpoint, huh? Let's see. It does. That's funny. So look at that. The 15 closes right on consequent encroachment. Okay, so that's still fine, actually. We've now opened with the volume imbalance on a 15, actually, and that's perfectly aligned with the first presented. So I'm still going to trust that if we can get outside of the 15, close above it, that'll be the longs. But if we're going to run bearish now that the 15-minute has closed, we should get the movement. We'll see. Currently at equilibrium as well, so that's kind of why we're getting a little bit choppy. We're reaching that equilibrium here. Lowest low, that just cleared out that liquidity to the swing point high, equal highs. Price will make an attempt for that equilibrium. Yeah, so for me, it won't be nothing. We'll look for longs only. Oh, we don't need that. Let's see. Did NQ give easy short setup from the top? I mean, let's see. Yeah. Like my short would have been right here, right? As we often say, if we're going to clear buy side, so as we trade into buy side first, we consolidate. We then close above that with a fair value gap. Those are always going to be key fair value gaps. So now as you invert that, right, you trade outside of the buy side. You first create one inversion here. You then hold here, and then you close below this fair value gap. That would be really where I'd be looking to enter, right? The fair value gap paired with the original buy side liquidity pool. And you'll notice once we close below it, we hold the buy side, close below fair value gap, use the fair value gap, not even touching the buy side again. Fall lower. And now just stair stepping. Right, 1 minute inefficiency holds. So the only inefficiency that was created, that is what ends up holding. ES did not take out that low yet. So slight SMT could simply just be ES lagging behind. So I'm not going to think too much of that yet. Okay, yeah, just choppy. So maybe 10:30 to 11 gives us something. We'll hang out till maybe 11:30. Simply reading. And here, though, not much to go off of, okay? Don't want to overanalyze. Simply referencing higher time frames. So as we said, we're inside the 15. Just want to see what we do there. As you said, NQ was able to clear that low. So now if we can continue to push above midpoint, if we can leave an inefficiency here, that'd be best case scenario. Okay, so it looks like, so no fair value gap going to be formed, unfortunate. We'll see if it leaves any whatsoever. If we're going to hold the bullishness, though, we should respect the high, the 15, now that we've come below it and got back above it. As we said, I still would favor a 15-minute closure. The 5 minute has closed above the 15. Same with the 2. So we do have a 1 minute in here. I'd want to see if that can hold now. Right, will that be what is respected? See if we can't get above opening range gaps midpoint. And then into the inefficiencies up here. I would think from equal highs, like what would be the easiest target would be this one because it's equilibrium. Still stuck below opening range gap. So we'd really want to see that for like true confirmation that we can flip bullish now. But so far, higher time frame starting to align. 5 minute was able to reclaim that. As we said, 15 minute is really what matters. But I like that the 15 minute candlestick held consequent encroachment and then opened with the bullish volume balance. So we still have 8 minutes. But in my mind, we should be able to maintain that bullish delivery. NQ pretty choppy now. So NQ ran that low as we mentioned, just consolidating still at that bearish premium. So we're going to be stuck here. Right, we don't want to get too convinced, thrown in too early because the 1 minute candlestick structure here can be false. And even though this one did run a low and ES didn't, we may have a chance that ES makes another attempt. I still like that though. Honestly, already right there would be fair for entry. Using the most recent swing low. For real confirmation though, like, because we're choppy, I want the 15 minute to close. So I won't wait, I won't do anything until this 15 minute closes, just for confirmation. Right, especially after already having a winning trade. That's kind of what I'm talking about with being a lot more demanding of the entry. To where even though we could see that this may want to hold and it runs, I'm waiting more off time-based entries at this point. So I want 15 minute to confirm that it's going to get back above and then look for a retracement to then use as entry. Because especially like if it is going to maintain this choppiness, it will stay in the range for a little bit. Hey, I was going to say congrats, but yeah, that's kind of what we expect with payouts or with Apex. Like I said, very good opportunity for extreme capital growth, but the payout rules are just, they're too wishy-washy, man. Like they're not clear-cut, so they can kind of pick and choose how you want to get, or if they want to deny you payouts. I was just pissed because when they sent the email saying like they're going to have reviews of my trades with commentary and all that nonsense. It's like, what are we doing? What are we doing? But hey, either way, requesting a payout, that's hype. Congrats, man. Hopefully it works out. Hopefully they don't hit you with some goofy payout decline for some reason. Nice, right? And that's how we kind of protect ourselves there. Is that, as you said, 15 minute is the key driving force for me to trust that. Instead, we simply hit opening range gap midpoint because that's where we're going to maintain bearishness because the higher time frame has closed below those areas. From there, we hold, break lower into the 1 minute. And then, if that's the case, as we said, I would aim for these lows here. And if we just run lower, we just miss that. NQ held nicely. So as we said, we're not trusting that that's SMT because we're still holding the premium and the 15 minute is still really bearish. So we fall right through that. Nice. A little better in NQ for sure. Aggressive move. We might reach right for that liquidity. We did. Cool. Oh, well, inside that, let's see. If we stay extremely heavy, I was thinking this 15 minute here would be what we want, but if we fall through that, we might get these consolidation lows. Let's see. Just continuing this super choppy range-bound delivery. Right, so as we get to the extremes of the range, price will retrace. And that's what we might get here. Yeah, so at this point, I'd actually watch this. This will probably want to hold. We're extremely heavy, so we'll probably just keep falling. Come back to Forex. My only issue with that is that I don't like CFDs. Like, that's the downside. Okay, so let's see if we do close below this. I'm looking at the large 1 minute here. Because if we close below that and leave that fair value gap, that might be what holds us actually for another run lower. I'm kind of watching that. So for me, my expectation would be maintain heaviness, and we'll probably want to get these relative equal lows here. And then this is our daily volume imbalance, I believe. What was this level here? Oh, midpoint. Okay, it was at midpoint. Clear up some of the nonsense within this. Here's our daily volume imbalance here. I do want that. It's going to be key. It could be, yeah. Well, that's why I'm saying I still would favor long. So if we just keep running lower, I just won't be involved on the dump. And that's fine with me. It's always going to be more moves. So like I would want to see this bearish fair value gap get inverted. That's what I'm looking at now. We've hit the daily volume imbalance. We've closed outside of the bearish fair value gap. And we've left a bearish fair value gap here. So like if we can invert that, that'll be nice. If we're going to maintain bearishness though, we're going to hold from here. So just be wary of that. Right, you have the 1 minute midpoint, you have the old low, and you have the bearish fair value gap. So this is kind of where price would bounce off the daily volume imbalance, trade back up into the premium, hold that premium range, and then make another pass to get below the volume imbalance and target the lows. Like if we close below this daily volume imbalance, I would expect price to reach for these lows here. So that's how we can continue to follow this. Oh, I missed your thing. You say you trade Apex to get your money back. Fair enough. Yeah, I got my chunk of change from Apex, so I did also kind of move away. Yeah, rules are just a little iffy, man. The trailing drawdown. Interesting. I wish we had some type of trying to frame up a long from here is a little interesting. Okay, we closed above. We could almost just use that. Nah, because that fair value up there is a little too much. Yeah, especially because of the 2 minute. So same idea, right? Kind of demanding a lot, so want all these higher time frames to really confirm that. So I want to see if the 5 minute can close above. 5 minutes about to close, same with the 15. If these two candlesticks can close above the volume imbalance and the actual fair value gap, that may set up into motion a potential long using the daily volume imbalance to get back up into a first presented inefficiency here, 1 to 2. But the 15 is going to close. Okay. Yeah, look at that. We closed right on that volume imbalance. So for me, still bearish. Nothing. We can continue to hold and run lower. We're just stuck inside the daily volume imbalance now. We may want to use that as resistance. I'd have to wait for the inversion play here. So the full inversion of this. And then I would wait for the retracement into the volume imbalance. So I'd want to see a candlestick close above and then look for like a deeper retracement to go long off that. But if we want to maintain heaviness, that daily volume imbalance will be key. So that's kind of why I have these up. I want to see what we're doing inside. You can see we're getting stuck right in between. We hit the low of it, wick we trade over to the high of it, wick Now we're inside of that. Ooh, the coffee. Yep. You guys are gonna have to give me 5 minutes and I'll be right back. Follow price, enjoy. Okay, let's see. Yeah, I was gone. We're back. Still stuck inside. Not surprised there. Oh yeah, just one today. Up here. 5 handles, midpoint to the equal highs. And then running. Been trying to get long, but we've just been moving lower, and I'm fine missing the rest of that. As you said, it's Friday. I'm really not even trying to push for anything else. If we can try to get long though to show, that'd be nice. Simply went for that. Ooh. Yeah, I'll be honest, I was lucky there. I had it set for 5, but I was actually going to target here. So when I set the trade up, I already had the limit set like this. But then I was going to move it, and I just didn't move it in time. So I did luck out there, to be honest. Just high-ticked it before we had the fall off. If I would have aimed for the actual highs I had wanted, same. Probably would have either been stopped at break even or for a loss there. Volume imbalance. So yeah, that daily volume imbalance now just holding us. Let's see if we can't get above it. As I said, for me, I would really want to see us not only get above the daily volume imbalance, but actually invert this at the same time. And then I would try to use that as an entry if we came back down into it. Because my expectation would be, it's going to be a high resistance run, so it'll have some give and take. But it would be something like that almost. See if a 5 can't get above. So far, all the higher time frames, right, still kind of stuck here. The 15-minute did wick the 15-minute fair value gap, so that's nice. So yeah, if the 5-minute can actually close above, 2-minute will close above, 1-minute will have a fair value gap, and then I wouldn't mind putting that on there. 5-minute fair value gap, so that's going to be iffy. That'll be the premium that we have to get through. Right, 5-minute here, 1-minute here. I'm going to move to 1-minute because I don't really care too much about that. Just going to use the volume balance. Triple, I can't lie, never heard that one before. Triple witching. Living in a world so cold. 5-minute, let's see, does 5-minute respect that, or is, we've just hit the 5-minute? If we hit the 5-minute, close back inside daily volume imbalance, still going to be choppy in my mind. 15-minute, we'll have to wait for another 5-minute. So this 5-minute is able to actually close above the daily volume imbalance, so it may want to use that level. And we have a fair value gap there. Just a very small one. Oh, 5-minute still holding, however. Yeah, it could just be building liquidity, but I like the idea of trying to revert this now. We'll see what this 5-minute does here. Opposing PD arrays now, daily volume imbalance versus the 5-minute. Huge wick, that's not what you'd want to see, right? So let's see. News? What's this? That's a very interesting wick. Not surprised there though. Once again, higher time frames save us. So yeah, if we just keep falling, right, we'll just do this. We'll fall, consolidate, run the highs, fall again. Closure below volume imbalance, we would look for here. Did we close below? We did. So we've actually closed below that. We would volume imbalance tap that and probably just dump again. Yeah, higher time frame run would be nice. Right, that's these lows here. Okay, actually, so if we could invert that, let's see if it becomes a wick, as we're saying. Every time we're running out of low, it's a wick. If we can close below that, that to me will be a little more bearish. And now this volume imbalance will probably send us into even more lows. Consolidation lows. Yeah, I like that. Ooh, yes, sir. Take care, Dread. Enjoy your weekend, my guy. Cool. Yeah, so 5 minute holds us. Is what me? What do you hear? Oh. Oh, wait, is it brisk? I didn't even think that. That'd be elite. That'd be an elite pull right there. So at this point, though, honestly, daily volume imbalance, if we're going to hold that, we could probably just expect a continued bearishness. Into some lows at least. He said, now we need to know, are you brisket? The OG Brissy. So we fall short of this liquidity. Expectation would be from the 5 minute, we fall through the daily volume imbalance. We have a volume imbalance on the 1 minute candlestick chart itself. If we trade up into that, it should offer us resistance. We do have a 1 minute bearish here. So as we trade through this low, notice, as we said, we actually are able to close below that with a fair value gap. Those are pretty strong signatures in price. So I'm going to watch and see if that is what ends up holding and just sending us straight into that liquidity. That would make sense. Volume imbalance would kind of be where the wick would take place, but body should hold the fair value gap if it wants to stay heavy here. He already left, Mike. He was gone. I'm gonna guess it's probably not. I feel like he would have told us already. ICT brisket. I forgot my about. Deadass. He loved his briskets. That was funny. Just every day. Man had brisket every day. It was so funny. I was like, bro, how you even get the... I guess he got that protein in though. He stay eating. Yeah, now that you say that, it does sound very briskety, right? We're gonna ask next time he comes back. It's too random. So who's got a date with a brisket at 10:40 in the morning? That's so funny. Yeah, NQ, and it has a nice little 4-hour inefficiency in NQ, so that'd be smart. As we said, I think we would hold from the actual fair value gap that gets created. So as we break through lows, if we're going to create inefficiencies with that, those tend to be kind of where price will try to hold. Swing low just above an actual sell side pool, right? So now we have short-term swing point paired with the higher time frame. So that'll be a good kind of double area of liquidity to sweep out. As we said, as soon as you close below the daily volume imbalance, that should be the area of resistance, especially opening with the volume imbalance. So we wick a little bit higher, but hold that nicely, displace through the low. And now we pretty much would expect, now that we've put in the high of this fair value gap, if we're going to trade into the high of it, close below it, that should be balanced, which means we'll either run from there and attack the liquidity, or if we did tap that again, we would expect that to hold in the short term to try to get the sell side out. We did just pick up this short-term low here. So in those choppy conditions, short-term low, we'll see a quick little retracement, but I do like that low here. And that's really because it's a 5-minute swing point with this inefficiency. That's why I'm keying that one specifically. Is that as I look at this here, We do have relative equal low, so that's the external range. But let's say we get stuck at the last discount prior to that. In my mind, it would be this 5 minute, where it has that swing point as well. Yeah, the ES&NQ. Yeah, that held nice. Yeah, we actually did get into that. So we did get into the 1 minute here. Wanted to see the actual daily, but instead we just used this 1 minute. That may be all it wants to do. Bearish volume imbalance, would expect that to stay open. Even in here though, right? Sweeping the low with the wick, but with the volume imbalance, to me, that means that we should hold the up close candle, get into that, as we said, 5 minute swing point and the 5 minute little volume imbalance, or excuse me, fair value gap that's here. And then we'll see if that's kind of the last little point of reference in here. Because right, we clear this low, original consolidation, expansion. Consolidation, expansion, smart money reversal at the high. Buy to sell model, followed by another buy model on the way up, would be nice. On the 1 hour. Yeah, we did have that, up here. This high. Oh, get it perfect. Boop. Oh, there it is. But like I said, if we're just going to stay consolidating, that's fine. We'll build that liquidity to attack later. That's kind of the expectation. Same here in ES. Those relative equal highs are nice, which is why I'd rather try to go long. To just maintain that consolidation almost. See if we can sweep these lows out. 1, 2, 3 lows just above. Yeah, we should get into that, I would expect. As we said, we do have equal lows here. So if we're going to be aggressive and fall through, equal lows. Once again, choppy. And that's what we'd expect, right? You notice that every time you get the quick expansion, you have that consolidation. And then you'll get the quick move, right, with the consolidation, same idea. So we have the expansive move to clear out a low. We would expect consolidation here. Pretty much want to see now what we do there. Fall through that, we should be able to get into, where's our previous day low at here? That'll be oh, right there. Okay, yeah, I like that. So previous day's low. Right, if we're gonna fall through that, yeah, we fall right through that previous day's lows here. So now we've hit previous day's low. My expectation would be we're just going to stay heavy, right? If we're going to kind of disrespect these discounts, you expect price to deliver lower. So now we could actually look at the original consolidation low, which would be here. If we're going to come back down for that whole consolidation and pretty much create the entire buy to sell, right? This is the original low that it originates from. So that could be the objective. under midnight as well. Kind of curious to see what time is it. 5, 2. Haven't seen, right? First movement we had in a while. Retesting the 5 there. Did we get, what's that low at? So we didn't close below. I'm trying to see if we close, yeah. So look at that delivery, geez. We closed perfectly on previous day's low. So I'm kind of watching to see, do we invert this or do we actually want to fall through yesterday's low and get out the fair value gap here? Midnight level here as well. So we're watching that. Right, that's kind of where in my mind we would short from, is this midnight paired with the sell side, paired with the fair value gap. 5 minute and stuff is all wicking though, so we'll see if the 5 minute can hold that. Because if we do invert that, that would be nice actually. And we might try to long that back up. So just watching this fair value gap here. Nice wick. How do I go short? Yeah, we just did on that. Stop right above that swing point. Da-da-da-dun. Retesting previous day's lows once again. Relative equal lows, and Q cleared the low. We'll see if that stays heavy though. New week opening gap, low and NQ potentially, same fair value gap. I would like that, right? Original consolidation low. I'm short right now inside of this. So as we respect the first time, I'm getting short right on that sell side, the midpoint. Stop above this candle swing because it had the volume imbalance. With stop right above the fair value gap at this point. Like pretty easy. Just to target the low. This low. Just try to hop on board with the trend at this point into the final consolidation low, right? That's my objective, is that we want to get the original consolidations low. If not, and we come all the way back up here, that's fine. Small stop in like this. Quite literally a 2.5 handle stop. So we have equal lows there, as we said. NQ took that low though, so it might be a little SMT. We just want to see another fall through of that. If not, if we come back up in here and come through this high, we'll be stopped at that point. Because yeah, I pretty much just want right this original low with the 5 minute to be what holds. 5 minute chart here. We've closed below it. Want to see that hold. Ba-da-ba-ba. Already not looking good, right? Because as we said, if we're going to trade into the high, close below, this should be balanced, which means the midpoint should be what holds. So now that we've hit midpoint, we need to see what reaction we get. But closing above that, even venturing above that, not necessarily a good sign because we had the volume imbalance created bearishly too as we left. So we would want to see that hold us. If we're going to start getting choppy in here, we understand that we do have the higher time frame reference point, kind of like the last line of defense, right? Which is why we're allowing this to be the stop. But I wouldn't want to see really any higher than this level here, the original sell side pull with bodies. So that's really what I'm keying up on now. If we were to close above that, my expectation would be we're going to venture into the high and get stopped out. But then it'll be 11 o'clock. So for me, we'll be done there. End the day slightly in profit with the Friday. We'll be content with that. Unless we did get hard displacement, I wouldn't mind trying one more and just end and break even. Closure above, right? So as I see that already, he says shit meaning chart. No, you good, bro. I figured, yeah, charts gross. Well, your best shorts, right? If you were gonna go short, would have been probably here. Really, would have been the only one I would have trusted fully. Because even inside this, we're just playing around that fair value gap. Oh, close. Let's see. Equal lows. Just above the sell side. Yeah, I don't trust that. I'm out there. I'm just closing. Break even. At this point, right, we're spending too much time. If we break lower, I'm fine. Heading into 11 o'clock on a Friday, I'm going to be very quick to just preserve capital. So we'll close that trade break even for me. And then I'll probably just be done there. If we run lower, cool. I don't need to be involved, as I said. Very quick to preserve capital in choppy markets like this. Too much back and forth, right? So for like low resistance liquidity runs, as we said, when we trade into the high of this and break lower, we should not even make another attempt into the high. We do. We still could break lower, but that's just textbook high resistance. And for me, I'm fine not being involved, even if, right, price breaks lower. So we'll show real quick here, and then we could watch. That's what we said. Original longs, inside fair value gap, equal high. Trying to get longs, nothing. We displace through the sell side, through the 5 minute with these lows. I'm getting short, trying to target that. So I'm short there as we trade lower, nothing. We trade back above it. We come back down into entry. I'm just closing, break even. And now we'll probably run, which is fine. But as I said, I don't ever fear missing moves. I'm never worried about it. I'd rather just keep peace of mind. And a small move like that is not too big of a deal. Sell side here. But these things will repeat every single day. But in high resistance, like this is what you get, right? Like it doesn't actually get into it. It just continues to play around. 2 L's, yeah, all right, brother, happens. Not the easiest of days, but being able to be fluid helps. Cool, so yeah, if we can get that sell side, that'll be perfect for us. And we'll be content there. Fall short, that's comedy. We should stab right into it would be my guess. Perfect delivery. Equal lows now. And oh, playing. That's funny. The perfect delivery. Love to see it. And there's the sweep. Cool. So that's just an example. A little mismove there. Quick to preserve. 5-handle run. Not involved. We're okay with it. From here now, that is the original consolidation. So let's say that you're still trying to force a long In my mind, this inversion would be the best one to try if you're going to do that. Which maybe we could do that and watch what times we'll hang out a little bit more. Just see if we invert that right there. All right, because now let's see, original consolidation low. So this low clears liquidity here. So we clear all that liquidity. This is where it originates. Consolidation, expansion, consolidation. Yeah, I like that. We've picked up that low, so let's see if we do invert. Retesting sell side. Yeah, I actually don't mind that. We'll hang out a little bit more. I want to see if we can invert this. This would be a nice long. I actually wouldn't mind attempting that. If we hold here and just break again, we do have relative equal lows here, but as we said, we'll just be short all day and just miss that. I mean, I would say the mitigation block is a continuation model. In reality, fair value gaps themselves are pretty much continuations. Like, you can use them to frame different types of setups, but in a trending market, the fair value gap will be what you want to enter on if it's trending. So I would say fair value gaps. Mitigation blocks, of course, because that's coming off of a reversal, right? Like, usually the breaker will be the actual reversal. It's like if you put in a low. Looks like you put in a low, right? You clear that low, and then you break. That's where the breaker will be. And then the mitigation block is kind of where the continuation trade will come into place here. Because we'll have the low, high, low, broken, breaker holds. It should hold, which will then create another leg. Mitigation block would be the continuation where you would enter then on that second leg right here to capture the continuation higher. So like here, let's like kind of just forecast that it is going to flip, right? The reversal would obviously be the breaker here. Well, first entry would be turtle soup as you enter that. And then you would look for like an inversion. Then the breaker. If the breaker holds and we break again, then you would have a potential continuation here, right? Something formed here to catch long as well if price was to trade into that to target higher prices like that. But we'll see what we get here. Because if we do close that, I might actually put that on. Sure. This is very aggressive, but we'll try it. Something simple like this. And something like this, we should be wrong or right quickly. Right, because we're at pretty much the extremes of the range. So if we are going to revert into the range, it should happen soon and with speed. as we trade through all of these now. If we pretty much are off sides, it's just going to consolidate here or fall right through, which is fine for us either way, right? Wrong or right quickly is what we like to see. Is FOMC week always like this where they balance? I would say so. I mean, it's always going to be choppy. FOMC is much more of a, we'll say, seek and destroy event, where like CPI is a lot more one-sided, right? Like it'll pump up and then continue to deliver. FOMC engineers liquidity throughout the week and then interacts with both sides of that liquidity before reversing. But I mean, aside from FOMC, just I continue to reference this just because sound like a broken record, but it really is a huge impact, right? The uncertainty of just the global affairs and whatnot. Like when you're in very uncertain times, risk off scenarios, we call it, the market just moves very choppy, right? So you still get runs, but they're all high resistance, very little low resistance liquidity runs. And what we mean by high resistance is that just a lot of give and take, right? I mean, here was like a textbook example to where usually, right, if we're just going to run straight into sell side, it'll hold the first fair value gap, break lower. But instead we trade into it. We have to go all the way back up into it again, and then we fall. Same idea here. We trade into it. We can't get outside of it. We trade all the way back in, we fall. So just a lot of high resistance liquidity runs in this type of scenario. No problem, David. Appreciate it, man. Glad you find it helpful in some way. That's all we're trying to do. So from here, as we said, we'll see if we just can't get, I mean, honestly, we might even just go one to something like this. Midpoint daily volume imbalance. If we just keep slowly falling lower, then we'll end up break even on the day. I like that numbers, Joe. Walk away if you need to, brother. Whatever's best for you, for sure. Take care, man. Have a good weekend. We'll be back next week. No shame in closing the charts, right? If you'll find that you can't resist the temptation to trade if you're looking at it, close it, walk away. Eventually, though, I do think it's beneficial to force yourself to not trade. That comes later, though, when you feel comfortable doing it. Because then that really builds reps. Because one thing I've been thinking about, this is more so psychology talk. I often say, like, I don't feel emotions, or you don't, as you get better doing this, like, you stop feeling any type of way. And I still, yeah, I mean to not trade, right? So, like, let's say that you don't want to be trading anymore. You're done. You've met your rules. At least in my opinion, it's good practice to still sit in front of the chart, watch what's going to happen, forecast moves, but not actually trade, because now you're building, I like to call them calluses, right, in the mind. You're building that repetition of being able to be disciplined in your approach and not execute even though you're kind of seeing potential moves. And of course, I think that's something that should come a little bit later. It's like if you really do struggle with it, like you're saying, it's smart to just close it and walk away. But as you start learning more and you're getting a little bit better with those emotions and handling that, something like that is still beneficial in my opinion. Because then it allows you to build that discipline of doing nothing, right? It's just sitting on your hands. 2 years is still pretty minuscule, man. Give yourself some grace. Like 2 years in the grand scheme of things isn't much. I know that I thought 2 years in I would be a lot further progressed than I was. So, I mean, that's all I can give you if that's any benefit. So, yeah, give yourself some grace. It's hard. But one thing I did want to say is, right, with the emotional part of it, you're always going to feel those emotions. Like, the more I've been thinking about it lately, I say I'm pretty emotionless, which I like to believe. But it really is more so the, let's see, I'm trying to figure out the best way to explain it. It's the discipline to not let the emotions dictate the actual, right, analysis and executions, is how I would put it. So as I look at it, like, sure, there's still times where I feel uncertain, or maybe I'm in a trade and I feel as if I kind of want to close because it's not showing me what I expect. But now I've built the discipline over time to not listen to my emotions and to not let the emotions dictate the actual trade itself. And that's kind of the key part. And I'm out there, by the way. I'm just going to close that there with the actual funded. We'll let this run, but I'm out there fully. 6 handles, content with that. So from here, we can just go like this. And we'll see if this one wants to run, but just so you guys are aware, fully out. Let's still buy there, out there at the high. Break even, longs here. So overall, good day. We'll see if this paper trade wants to run or anything. Because I do think that volume bounce would be a nice area to target, right? For me, I just don't need to get up there. But yes, back to it. As far as the emotions, I believe you're always going to have to deal with the emotions, but you just get better with not letting the emotions dictate your actual trading analysis and plan. Because at the end of the day, like, we're not robots, right? It's going to be hard to just be even kill all the time. Should have had 2, so we could have partialed there. But that's why I'm closing here, just because, right, we don't need to be anything crazy, as we said, especially on a Friday. Just partialing at that high right there. A little short-term high being cleared. Because if we do want to stay in the range, after clearing that high, we'll break. If we get a closure above that high, we'll go break even and just let it rock. Not want to see this be traded back into. You've seen improvements, hell yeah. Smooth and steady, I like that. All right, slow is fast. Funded accounts are easier to come by. All right, well, yeah, it sounds like the progression is there. The over leveraging. Is it over leveraging or just like over trading? Like taking too many trades or putting on too much risk per trade? Because those are kind of be 2 separate issues. Too many trades, which are okay. Yeah, so the over trading, that's fair. But hey, that's part of it too. It's very easy for me to sit up here and say what you shouldn't do, right? But that's because I've done everything wrong already. So which is why I don't necessarily like to teach that way. I'm like saying, this is what you shouldn't do this. I always try to give my opinions based off experience. But at the end of the day, people kind of have to go through it themselves to learn why they shouldn't be doing it, especially as you get better at this. So yeah, that'll just come with experience. And right, I dealt with that too. Too many trades, but that helped me learn when the highest probability trades will form. All right, so you kind of have to find the sugar in all the nonsense. Optimistic, we'll say. Right, well, it sucks at the time because you realize you probably shouldn't be doing it. If you take it as an opportunity to learn and go back and reflect on it, then you'll start to find where like the best setups actually are. Right, which setups are false, how to stay out of those fake setups. And your discipline will also just improve over time, as we're talking about. Like, I think a great exercise is to just sit in front of the chart a few days, and I used to do this, and simply just tape read it. And that's really why I can do what I do now with you guys, right? Like, explain almost each candlestick as it paints. Because for a long time, I didn't worry about actually trading. I worried about being able to read what the chart is going to do itself. And then as you get better with that, right, your trading will naturally get better because you learn, you become a little more picky with when the best setups will form, where they will form at. Closure above, like we should close here, but as we said, we're just gonna let this rock. I'm already out fully, so at this point we're just watching for fun. This is what we'll call getting something for the social media right here, huh? Gotta show off every now and then. And for me, we always go, because we are too precise sometimes, I'm going like that, to be honest. Don't even need to get the volume imbalance. Give me a round number, 60-30. Oh, yep, 60-30. It gives you 12 handles. Break even, risk-free trade. So now it's just live and let rock. And wait for it, wait for it, wait for it. It's playing volume imbalance. It hits the close of that candle and then accelerates into our exit here. We've hit the close, now we accelerate into exit. Yep. Okay. Nice. Well, we're done there. That'll be it. So if you guys following, right? I mean, another reason why I'm never too worried about missing moves or anything like that. Patience pays at the end of the day. Oh. We'll see if we hit the volume imbalance itself, but I said, right, I'm just closing at this here. So kind of the last area that price would stop if it doesn't get into the volume imbalance would be the 1 minute that we've already held at. That's where we get high ticked at. But my expectation would be the actual daily volume imbalance. And then potentially maybe like highs up here, who knows. But yeah, that was beautiful. Right, so for us, that's a trade that I will take that 10 times out of 10. Because if we think about it now, right, price has been moving lower, as we said, original consolidation low. This is going to be the whole buy to sell model here, where we have the original low, the consolidation, right, displacement, using inefficiencies to then displace again, swing high, smart money reversal. So now on the way down, we're targeting all the original sell side left behind. Here, 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 and then ultimately here, which is the original low. Hitting that completes that whole model, so now we'll be allowed to retrace into this range high to low. We spoke about how as we broke through this low, we've left a bearish fair value gap that is also aligned with the previous day low. That's a key area. So after coming off of the original low, creating the inversion, closing back above previous day low, for me, that's a no-brainer buy, right? So we buy that every day. And for us, pretty simple, because now we could target new week opening gap high, daily volume imbalance. And that's where we get that nice run, right from here up into that. Admittedly, as we said, the actual funded, we close early just because I'm being a little bit more conservative with that. But same idea, right? Same exact idea. We clear that. We originally try to go short, get stopped at break even. Sure, I could complain and say if I would have kept my stop up here, we could have won on the way down and the way up. Yeah, that's cool, but right, break even is fine for me, especially after having the win here. So we have the win, we go break even, we still understand what's really taking place, so now we get the long. This one was even better entry. I actually used midpoint here. So midpoint of the inversion, still paired with previous day's low. And then for me, just simply targeting those equal highs paired with the liquidity void here. Right, because in my mind, if we are going to be stuck and we don't actually want to get into the volume imbalance, what's the low-hanging barrier to exit that still allows 5 handles? And that's here. So from here to here, that's actually 7. So even better than the normal ENS model. Sure, we could have reached for the extra few up here, but as I said, I'm fine not having to do that at all. But yeah, at this point, what time is it? not really doing anything. I might just hang out here with y'all for a little bit. NQ, let's see what you're talking about, Mike. All right, look at the NQ chart. Would you have trusted long after seeing what was still below as potential targets? So let's pull up this here. So for me, NQ, right, that is fishy actually. And that's really why I like ES a little bit better. NQ, you could still argue it's the same kind of framework. You would just have to use the fair value gap here. And the actual midpoint of this new week opening gap. Yeah, especially because we held that perfectly. So like for me in NQ to feel confident, I would have been looking at this inefficiency. We did end up creating the inversion. I still actually I would have felt fine with that. Yeah. Especially seeing that ES did take its daily low. Right, so even though we have these lower objectives here, we've really cleared all the liquidity that we need to, and we're inside of a large gap. So seeing that, offering that reversal, that entry would have still been fine, right? That inversion play there. For me, I would have targeted the actual previous day low. So I would have tried to reach up into previous day's low, whereas ES, we were using that to run higher. But because in NQ we're below that, I would have actually used that as like the exit point. Same idea though. All right, we create the swing low. We trade into a higher time frame key area in the form of the hourly midpoint. We displace away, inverting, leaving a 1 minute fair value gap there. So that plays well. I like that. So, but right, for ES, I mean, for ES, it was just so much, I wouldn't even say cleaner because it moves the same, but just the reference points made more sense, right? The actual original consolidation low, having previous day's low as the swing point. So I like everything in there a little bit more. But that's just personal preference. I'm an ES kid. ES is my baby. Short-term high, your goal. That's what STH means, short-term high. Let's see what we get now. Yeah, STA is just short-term high, right? So what a short-term high is, any swing point, really any swing point is a short-term high. Right? Here, short-term high. Here, short-term high. Here, short-term high. And then same for short-term lows. Right? Swing points, short-term lows. Short-term low. Intermediate swing points will have short-term swing points to the left and right. That's how you can differentiate them. Right, so like here. No, short-term low. Short-term low. Short-term, short-term. Intermediate swing point would be here. So this is our intermediate swing point because short-term low to the left, short-term low to the right. Or excuse me, these would be short-term highs. Flip it. Short-term high to the left, short-term high to the right. Same reason I'm taking this long as well, because I'm expecting this to become an intermediate swing point. Right, we create the short-term low, we form a new short-term low. So as we displace, we would expect another short-term low to be formed, creating an intermediate swing point that will hold, and that's where the stop is at. So it's this kind of market structure, getting familiar with market structure and things like that. 10 a.m. open, could be out. the closure of the morning range. Right, if we bring up now kind of the time-based PD arrays, you'll see all the stuff that we have to kind of contest with to get back up. But what you want to watch is, let's say that this is a true market maker. So we already created the buy to the sell model. If this is going to be now a sell to buy, right, and we kind of have never mind. I was trying to find the bendable. What's the... Nah, whatever. Now I gotta find it. I know it's here somewhere. Arc, there it is. Oh, I lied. I don't know how to use these. F it. Basically, what we'll be looking for, okay. So on the buy side of the curve here, all of the premiums that held us on the way down should be used for discounts. So what we can look at is, let's move some of these here. All right, so like what we were using on the way down, well, we consolidate, opening range gap, midpoint, we're far away from that. 5 minute here, we're far away from that. We'd expect that to come up here. As far as in here though, this volume imbalance is what we used to create the last leg lower. So in my mind, right, that's why I'm kind of keying this up. If we get above this volume balance, it will then turn into support. Hold premium, that holds us lower. We trade up into it as a speed bump. If we get above that, that becomes support. Then if we trade to the 5 minute and get above that, that would become support. Right, and you could follow that all the way back up. Can we go long again? You can go long. For me, I wouldn't go long either until we retraced into this breaker here, right, in this untapped inefficiency, or unless we were able to displace above the volume imbalance, and then I would use that with whatever swing low was formed in here as the new area of entry. Right, expecting that second stage of basically the distribution higher. But for where we are right now, I would just not blindly go in, because we could easily hold that daily volume imbalance, fall back on ourselves, and then make the actual pass at these relative equal lows if we wanted to. So this is where, once again, we go back to being patient and just waiting. $11:30. So yeah, we'll probably hang out till lunch, just see how we close out today heading into lunch. Once again, retesting daily volume balance. That's this level here. From where this candlestick closes to where this candlestick opens. You actually wouldn't mind that, because right, so we spoke about the whole mitigation slash or the breaker block into mitigation blocks as continuations. This is where I would kind of like to see that actually form, right? So we have the original breaker that we spoke about. We come in and put this low, we have this high, we break that low with the fair value gap, which is even better. As we said, we'll first use the inversion, but then we'll close above the actual breaker itself here. Ever since we closed above this breaker, we haven't come back in to test it. So now what I mean is we can form this high this breaker is still active, we engineer short-term lows. We then break those lows to retest the actual breaker and the untapped inefficiency, which we would expect to hold. Then get the pump higher. This now would turn into the mitigation block, and if it was paired with the daily volume imbalance, that'd be even better, right? Because then you could just use that on the way up. So I'm kind of always doing stuff like this in my head, right? Always expecting or picturing what price can do and how price will move if we're expecting it to reach for a certain area. That way, when it does occur, there's no hesitation or confusion. But to me, I would like something like this, like best case scenario for me to long, right? Because as we said, let's move now the structure real quick. I kind of want to keep it all though, so you can see. So we're gonna just put it here. So that's the actual structure itself, but the candlesticks themselves. The last up close candles here are the true breaker. So I bring that out. As we said, notice that there's an inefficiency that was never actually tapped inside of that. So the breaker itself was used. We close above here, technically. Very next candle trades down into where we close above. But the up close candles, right, once we close above here, we never get into that. So we still have that inefficiency. It's the same on a 2 minute. And it's actually potentially, let's see, a 5 minute is still open here as well. So yeah, if something like that did happen, I wouldn't be surprised to see that actually. However, if we said, right, if we just displace right through this, then I wouldn't expect that deep retracement. Can you show me your daily volume balance? Yeah. The only ones I have marked up are the most recent one here, because when we start getting into, like, in reality, right, if we were just to look at this, let's see. So, I mean, we have one here, we have one here, we have one here, and here, and here, and here, and here, and here. So in reality, the last 5 days of all created volume imbalances, I'm going to use this one, though, because it's the most recent one, and we're trading near it. That's why I'm using that, right? Because it's also the new day opening gap. You see that? They're overlapped with one another. So I'm referencing that point. I wish, man. I appreciate that, though. I agree. I would say I could read price pretty well. Just a no life who spent too much time in front of a computer. That's really all it is. Get a job, ya bum. Psych, this is the job. So like if we did invert this, that may be potential longs. As you said, this now, we would not actually want to see that be traded into. This would become kind of like the breakaway. We would want to leave that. We've already actually inverted this 5 minute, so we probably could just go. What's the midpoint of this here? And midpoint. I almost feel comfortable doing this, to be honest. At least into that high, another 1 to like 2 or something. Ideally 15-minute closes, 5 minute as well. No, we'll still wait. Because we have that 5 minute inversion now here. So we're gonna have that. Look how the inversion is the daily volume imbalance, right? The midpoint of that inversion. So as I see it overlap, I see the consolidation there. Yeah, if I was gonna have to force another entry, I would try to use the inversion, stop below the most recent low to just target that swing point like that. Low hanging entries, the inversion. Forcing the more sniper entry would be using the actual volume imbalance. It is 11:30, so I mean, for me, I won't take any actual entries just to do that, or just to put it out there right away. Remember, this is midpoint of the volume imbalance. That's going to be a key area. So I'm just watching that, but there are volume imbalances in that area. Yeah, are you referencing, if you're talking about like up here, yeah, right, I agree. There's a few different volume imbalances. The ones our target for one would be this one. This is a hidden volume imbalance, so they're not as easy to see unless you know what you're looking for. Right, like these are pretty conventional volume imbalances. You could see the gap. This is a hidden volume imbalance because where we close and open, there's a discrepancy, but it actually closes it in, so you don't notice it as well, but it's still going to be a key area. Right, so you have where it closes to where it opens is the volume imbalance. Look at that delivery there real quick. Random. No. All right, so now, that's what we said. On the buy side of the curve, those become support. So now we would watch. We should get up into that. We do hold that. So no entry there. Instead, as we said, we use the 5 minute itself as the inversion play. Don't even get the deeper retracement. That's fine though. It holds the 1 minute fair value gap with the body, but it digs into that, and now we displace through. Yeah, so now, right, as we said, this should be the buy side of the curve, and we should just continue to print higher prices. Closure above this, same idea, to be honest. Like you would expect whatever swing low should be protected there, and you could almost keep following it up. Closure above. Yeah, we should just keep running. At this point, how would I engage this, right? I would use that. I would use the daily volume imbalance. You could use this low as our protected low, but if you want to be safe, just go with the low of the daily volume imbalance as well. Right, not demanding crazy RR, just instead looking for a nice, safe trade that produces a good return. So that may be potential right there. Yeah, I would like that. Like the old premium displaced. Hesitation, displacement, leave, especially if we left that inefficiency there. I would expect that to want to hold us to produce another little 5 handle run potentially. In reality, stop loss should be below that low, and you could even do something as simple as like this. I like opening range gap midpoint, maybe this 15 here. So what's that? 1140, as I said, outside of my trade window. I might throw in a little paper trade though for y'all. Let's do it. Just so it's easier for you guys to follow as well what I'm talking about here. So I'll try to, what? It said you will not do that. What just happened? Okay. Second try. Okay, there we go. I keep these indicators closed, but you understand, like, right, new day opening gap as well, which is why I'm fine, like, putting an entry in there. And then we would just see if it can't hold that and accelerate, as we said, into the high of this. We would expect this to offer us resistance. So we're expecting short-term, pretty much hesitation, like we see here, or like we see here, even in the short term. So like as we trade up into that, we would expect some type of either just wick or a little quick consolidation, but then we'd want to see price run through that, use it as support and push through again. Kind of like we saw here, right? So we might bounce, hold, then we'd want to push, use it as support. If not, if we come back down for this low, oh well. And this over time is where I've learned, like, right, just so you guys know, purely paper trade here. Because that's, for me, I found that my best entries and exits will come between 8:30 and 11. So if I see something in between that 11 to basically lunch period, that's what I mean when I say I just let it run without me. Because per my rules, per my experience, I have more losing trades when I'm putting trades on within that time frame. So I choose to kind of just avoid it altogether. Doesn't mean that has to be you guys, right? As you guys learn and grow, you kind of have your own preferences. That's the beauty of these concepts, is that once you get proficient with reading the candlesticks, you can actually make your own system however you see fit. Some people only trade like the lunch hour. Some people only trade pre-market. So midpoint is what we'd want to see, and then you'd want to see the expansion through the high. Ideally, you'd want to see displacement through premiums that held us originally, right? So as we trade up into this premium that sent us lower, we want to instead turn that into a discount, ideally leaving behind a new discount in its place, so like a fair value gap, a volume balance or something. If not, we'll just hold there. The original 5 minute that kind of held us within this range. It's also pretty much our equilibrium, right? So I'm thinking if we are going to be stuck here, that makes sense, right? Look at that. So that's equilibrium. So if we are going to be range bound, after creating the high and the low, we retrace into equilibrium and then we consolidate. I'd like to see a little bit more of a push above equilibrium, just enough to get us out. If not, that's okay. Quick coffee refill. Be right back. Hopefully my guy Mike's not here because he's gonna scold me on the coffee. No coffee. What I may do one day is literally sit here and take every opportunity and put a trade on, just to show why that's not necessarily a good idea, or what you can do. I've done that in the past. That's something that Michael used to do as well for his private group, and I think he did it in public once, but right, for the private group, just so we could learn how to read price and spot the setups themselves, he would engage with every single opportunity he saw, not expecting to win every opportunity, but just to show like how many setups conform throughout the day. Oh shoot, he is here. All right, take it back. You didn't hear that. I was just getting more water, dehydrated. So as I said, we would expect consolidation like we see here. For me though, if we're gonna tap that midpoint again, we want to see a quick bounce. Can't believe you've never really had coffee. That's wild. I mean, I didn't have coffee till I was, I guess, like 25. That was the first time. But never in your life? Good on you. Good on you. Okay, that's fair. A little pre-workout. See, I never can get into pre-workout. I get too jittery, to be honest. That's why it's weird. Like, I tried it once when I was in college, right? Obviously, before weights and stuff. All my teammates would always do that. I could never do it with them, though. I get too jittery. It makes me shaky. I don't like that feeling. All right, for those following now, right? So as we follow price delivery, what we do want to see. Well, we say, okay, so we're getting stuck inside daily volume imbalance. We've cleared a short-term low. We've wicked into the original down close candle that our swing low or our protected swing low, or excuse me, our stop loss is under. So this is what we want to see is kind of the protected low. We've wicked into that down close candle. And now we've tried to make a movement away from midpoint. So for us, we'd really want this low to be not violated. In my mind, if we get below that low, we're going to get stopped, right? This should be kind of the new protected low, so we'll see. But now that daily volume imbalance high is acting as resistance because we've closed back inside of the actual fair value gap here. So I would need to see us make an attempt to get outside of that. Okay, so you feel confident with it. Animal Pump. What a name. Yeah, maybe I just gotta find the right one. Honestly, I don't even think the coffee actually affects. I just like the taste. Yeah, I'll try it someday. Ooh, right. So at this point, like we say, we don't want to see price getting stuck under the daily volume imbalance, not being able to leave the bearish fair value gap here. We'd want to see it get above that. As we said, this would have to be our protected swing low if we're going to feel confident that this stop loss holds. Any closure below that, we get stopped. Really, any closure below midpoint in my mind, we get stopped. So that's really what I'm keying up on. Midpoint of this now inversion. Wicks can go lower, but we don't want midpoint given way at all. And a matter of fact, we would want to see this 5 minute here be a breakaway 5 minute. Not come back into it. It's in the pill. Ah, okay. How big? I suck at pills. I can't swallow pills. I be cutting them up. I don't know why. I swear that my throat too small. My girlfriend makes fun of me. $12 pills each time? Like you're saying you're taking 12 pills at once, or that's what it comes in the bottle? In this particular case, why just not wait to premium of the current range, which is 10 a.m. for... Why not wait for premium for what? To short, or what do you mean by that one, Natalia? Damn, okay, now you're 12 pills? I definitely couldn't do that. I'd choke and die. So we're out there. That's fine. Still no entry, right? True. As I said, that's going to be all paper. From at this point, I'm done. I won't make any more attempts. No need to give that back. Okay, okay, I see, Mike. You're getting big, trying to be like Arnold. Low the daily volume balance, might want to do something. But Natalia, if you were saying why not wait for premium to go long, that's valid. I think that's what you're asking. This is just higher risk, right? This would be the true flip point. Same here. And that's kind of one way, like, all right, we are inside of the actual buy model, let's say. This fair value gap was not used in any way on the way down. So that's why these become a little bit higher risk. Whereas this one, if we were to invert this one was actually used as a premium to send price lower. So it's going to have higher sensitivity to be used as an inversion. That's just kind of what we talk about with, right, learning when and where the best setups will form. The highest probability setups anyway. I mean, that's kind of why you see like this one work, right? So this is what held us into the sell side. We invert that, we use it. Same with this one. Even though it was a little sloppy, but right, this holds us. So as we get above it, ultimately we end up using that, even though it's outside the lines a little bit. Whereas with this one, this is the first time we ever come into it. So we never use it as a bearish premium at all. Now we may get the fall, let's see. Look at that fair value gap. So we create that fair value gap perfectly on the daily volume balance. That's what I mean when it'd be like a key area. You want to anchor those 1 minute inefficiencies to the higher time frame. So now if we want to make a move lower again, original sell side, to be honest, would be in my mind. Let's see. Yeah, potentially. We may fall from that volume imbalance right there. So now, right, another opportunity. Doesn't mean you have to take it, but that would present an opportunity to go short. For me, time. So because of the time, it's a no-go. One long from extreme of the range, meaning discount in this case to the premium. One long from, what? One long? Yeah, one shot, one kill. Could be, for sure. Exactly, Hollow. Right? That's why time is such a huge factor for us. Time, then price. That's something I've learned over the years. Sure, we could look at NQ. What you want to see? For me, NQ, pretty much bearish as well. I'll say even more bearish because we don't even get above the actual displacement premium. Fall back below the original liquidity. What do we have as far as time-based PD arrays?
Actual displacement premium can refer to different concepts depending on the context.
Don't listen to me, bro. That's crazy. My phone. Yeah, I could see that. Especially here on this low, right? These are equal lows. That's juicy. I don't think ES left the actual equal lows. That's why I like that for the longs, but pretty much relative equal lows, same idea. So yeah, that makes sense. Like right on a 15 or a 5, that's going to be very easy to stab through. We often talk about how if we create these runs high to low, and that first low never gets breached, and then we stair step up, those become low resistance liquidity runs to run out those lows. That's kind of what we've been seeing all morning, right? So we could even start from the very beginning up here. We put in this low, we fall right through, we put in this low, consolidate, fall right through, down into this low, retracement into daily volume imbalance. So maybe now, especially because we've closed below, that's bearish breaker with inefficiency. My expectation would probably be if we do tap that daily volume imbalance, it'll set into motion another run into these lows. From the high to the low. Yeah, and then we run that high. And then we break the low. We actually had equal lows there first, huh? So we went equal lows. Consolidation, cleared that low. Broke higher. Held. Broke higher. Potential breaker. Lunchtime, yeah, I'm not convinced it's going higher, to be honest. Smite work, I like that. It's very smart. Wait for the true run. You keep renting that triple witch? I have no idea what that is, if I'm being honest. I have never heard of that before. At this point, I'm kind of just doing what I used to do in the past. I'm just giving you little peeps into my kind of daily routine. is I used to trace these candlesticks so I would learn the actual structure of the delivery itself. Just notice how liquidity gets interacted with, right, on swing moves. No high in there. Huh, okay. Might be a slow grind lower, especially during lunch now. Honestly, my expectation would be to close probably near this daily volume imbalance. If we don't want to actually have an outside range day to where we clear yesterday's high, we're just going to reference that daily volume imbalance that's right here paired with the original liquidity. Picking up pretty much weekly lows at this point. Right, as you said, we have the weekly candlestick. Weekly volume imbalance, so if it wanted to actually get back up here, I mean, that is just crazy to look at the chart here. Really been grinding to find some setups. That is actually so hideous, holy cow. Like, we haven't had any good delivery since, I'd probably even say, I don't even know. Here, maybe? Everywhere we look, consolidation. As far back as the eye can see. Crazy times, crazy times. Not the easiest. I thought 2 years ago was tough, man. Nah, this year worse. 12:04. All right, I'm trying to go get some lunch. Where are we at? Previous day low, probably again. We're inside the breaker, as we mentioned earlier, so we never traded into it as we create this like higher. So this could be a potential actually area where we would see price hold, especially if that's an OTE. It is, okay. So yeah, OTE paired with breaker. Here. Paired with 1 minute here. Paired with midnight open as well. I would expect daily volume imbalance to want to be tested. High risk entry, you could already, understanding it is lunch, so all of this is extremely risky. Right, simply using the breaker to just get up into the volume imbalance. Low RR, base hit. That would be nice. See if market on close doesn't want to do something. Get the profit taking. If it wanted to, that would be nice. Just run for it. We'd have to wait till the afternoon. At that point, I would just watch, wouldn't be involved. Bouncing as in up? Yes. Bouncing as in leaving? Also yes. Double yes to your questions, probably. Yeah, we're about to leave soon. Okay, I like that. There we go. The triple witching. That sounds like something in Hunger Games. As in leaving. Yeah, we'll be leaving here soon. You know how I get. I say I'm gonna leave and then I just keep looking. I get entranced in the charts. Here's what we'll do. Hard pass, right? We either, if we come into this daily volume imbalance, we leave. If we get below this fair value gap, we leave. There we go. I just want to see this last little price run. But pretty much we're done for the day. No more engagement. No more nothing. Matter of fact, we won't even do that. We'll just walk away. So yeah, we'll call it here. Quick look for tomorrow, for Monday, just to see what we have next week. Okay, so for high impact news next week, we're going to be working with, we got Monday. Nice. Pal talking Tuesday. Never a fan of that. Might have to take Tuesday off. Pal talking Wednesday as well. That's annoying. Might be afternoon trades on those days then. Thursday good. Friday good. Okay, so I mean next week a lot of high impact news. So maybe we'll get some to where we can get a few good trending moves potentially. Have high impact news pretty much every day, Monday through Friday. So going to be a loaded week. Fed chair talking twice. Yeah, it'd be interesting actually. Let's see if we get that. Like we said, probably should get up into that, I would expect. Yeah, the 10 shadow goodbye is the classic. That's the downfall of listening to Michael too much. You get stuck with his habits. But it's a good thing, right? It just means you're passionate. It's hard to quit. Addiction may be a better word. Passionate sounds better. Addiction gives it a bad connotation. So we'll say passion. That's how you break this stigma. I'm not addicted, bro. I'm just passionate. That's all. Sorry I have passion. Sorry you don't care about it. Believe. You have to believe. I swear. See, so right there, a nice opportunity. Boom, we're good. Dunzo. We out. Yeah, if it wants to get up there, it's going to have to start running pretty much now. That's why I'm not too convinced. Like if I came back at 130 and price had cleared the daily volume imbalance and was pretty much back up inside our opening range, at that point I would be a lot more willing to expect a run into highs. But honestly, I just don't see. I think this candle just stays like this. Like I think we just stay range bound here. Right, so we did pick up that weekly low, but there's so many daily volume imbalances within here that I feel as if we'll probably just want to close within that, leaving this high. For me, the only way that I would pretty much target that high is if, as I said, if we were able to get back above the daily volume imbalance with an hourly candlestick. More importantly, whoa, more importantly, we'd have to clear the opening rate. Like that's a pretty decent opening range. We could easily trade up into that and reject and fall again. But oh well. Right, as we said, that would have been a nice little setup right there. A little base hit, right? Using that breaker into the volume balance. Don't even need to catch a break in structure or anything like that. Simple base knocks. But all right. I wouldn't necessarily say this is running though. Right, because this could all just be a setup to fall through the lows again. That's one thing. You don't want to get too thrown off sides just by the short-term fluctuations. Like you would need to wait for key areas in price to be flipped. And for me, that's the volume balance. As long as we're maintaining below that, my expectation is continued lower delivery. All right, so this is our key real area in price here. Because we've already completed the buy to sell model. So unless we're going to want to immediately flip back into a buy model to target that high, after completing a market maker model like this, price will tend to go range bound, which is another reason why I'm expecting price to kind of maintain the volume balance. Could be wrong, but that's just things I've seen over time that lead to that understanding. That we've already established and created the buy to sell model. We're already below the daily volume balance. It's a Friday with no news. FOMC has been choppy. It's been a shortened week because of a bank holiday. We've already cleared previous day's high before the market opened in NQ. So all that together to me, right, leads to consolidation. But as we said, if we get above this, then maybe I would flip my idea and look for a run higher, but we'll leave that for the afternoon. So with that, we're done. We said if we get into the fair value gap, boom, that's all we need to see. We hold there beautifully, right back up into this or down. That makes sense. So yeah, we're done for the week. Appreciate y'all hanging out. Next week, we'll be back on Monday. One more time real quick. What time was high impact news, just to be sure? So we have high impact news at 8:45 Eastern, or excuse me, 9:45 Eastern and 10 o'clock Eastern. So we'll come back at 9:45 on Monday. We'll watch that first news event. We'll hang out until 10 to see what the 10 o'clock news does, and then we'll look for a setup at that point to get the week started. So yeah, appreciate you guys hanging out this week. If you're going to be around here the rest of the day, stay safe. Good luck, good trading. But yeah, have a good weekend, everybody. And we will talk on Monday. Take care.